Welcome to today's more important analysis videos with me, Rich Perry, market analyst at Hantec Markets on Thursday, 6th of September. The emerging markets decline that we've seen in recent, which has actually regained some of the momentum in recent days, it's just sort of tailed a little bit, you could argue. Nothing too significant, but it is interesting that we're starting to see that, yes, there is still an assessment of risk negative, and that is still the case in the market today. However, we've seen that the dollar has just lost a bit of its upside impetus. We've seen that equity markets in the European session have just started to become less negative. S&P 500 was down last night, futures are down, and Asian markets were down overnight. But European markets are not so bad. There is still this sort of mild safe haven bias that is helping the yen outperform and the gold price to also outperform. But the dollar is not sort of taking on so much strength anymore. We saw that big turnaround yesterday in sterling. Sterling jumped yesterday on rumours that Germany and the UK in the Brexit negotiations were sort of willing to give each other a little bit of leeway and be less stringent in terms of their details on the negotiations before a deal could be made. And that hence we saw a big jump on sterling. That unwound a touch yesterday, and that support seems to still be in place today, though. And the dollar is not as strong, certainly pulling back again. It seems to be that there is this sort of lack of direction increasingly across certainly the developed market or the major currencies against the dollar. And that's hence why we're seeing fairly choppy moves really on that dollar index. Now, in terms of yields, you're not really getting too much direction either. A little bit of a consolidation in the last couple of days. It's interesting that we saw a pullback on Wall Street last night that found support and started to sort of pick up again. So again, that sort of plays into this whole thing in the European session that maybe we're seeing some sort of a possibility of a bottom. So just keep an eye on that, I would, throughout today's session. So, what have we got to look forward to today? Well, we have the ADP employment at 1:15, which could give a lead to payrolls on Friday, although it's fairly sort of standard around that 200,000 level. But the big focus today will be on the ISM non-manufacturing data. ISM non-manufacturing data at 3 o'clock, and that is expected to improve again to 56.8 from 55.7 last time out. So again, if you get a strong number, that would sort of help to support the dollar and make again this what looks like a bit of a choppy phase continue really. But the strong US data does tend to sort of fit through into the selling pressure through emerging markets, but not necessarily sort of getting too much direction on the dollar against the major currencies. So further this afternoon, we've got the EIA inventories. It's delayed to Thursday this week because of Labour Day. It's also at 4 o'clock, notably. And crude stocks expected to be in drawdown by 1.4 million barrels. Distillates positive as a build of 0.9, and gasoline negative 0.9. So it's sort of fairly middle of the road numbers really. That's unlikely to do much to impact on the oil story, which I would add is being driven at the moment to an extent by the trade story. So keep that in mind. So whoa, sorry, just ruined all of that. So let's go to my chart of the day, which is the goodness, what am I doing? Is the EuroCAD. Now, EuroCAD has completed this recovery, this base pattern. Look at that. Left-hand shoulder, head, right-hand shoulder through the neckline, which was at around 151.90. But not only that, we've broken this downtrend. So you've broken a downtrend, you've formed a base pattern, and you've also moved above a pivot line that was throughout May and throughout May, June and July. So breaking that pivot line as well confirms the base pattern, and I think now means that we're going to be seeing a move towards a test of not only the initial resistance at 54.65, but also then that June high comes back into play at 55.85. So I think that what we're looking at is now a continuation of a move to buy into weakness. Now, just drawing a nice little uptrend there, you can see that the uptrend comes in between these two lines here, the neckline at 51.90 and the pivot around 53 figure there or thereabouts. It's not exact, but it's a sort of a more of a basis around 53 figure. So between those two, you've got this uptrend. So any sort of little corrective slip that unwinds this strong momentum now, I think it would be a chance to buy. So that's what you'd be looking out for within this move higher. The breakout following on from the base pattern, you've got the broken pivot, a little unwinding move is a chance to buy. Let's look on the hourly chart where you've got this nice little run of higher lows and higher highs. You've got strong momentum configuration on the RSI on the hourly above 40, finding support around sort of 45 to 50 now when the RSI drops back into those levels, pushing towards 70 and above 70. So it's pretty strong on the MACD lines as well. So it looks like any sort of corrective move is going to be seen as a chance to buy near term, as the market, I think, looks to continue to rally, having broken that downtrend, and looks to be pushing on the resistance levels initially at 54.65, and then if that gets broken, you're looking at 55.85. So I wish you good luck in your trading today, and I will speak to you later.